puts.
Mm-hmm.
He said, oh man, you should never use a put. And then he changed his tune. And he began teaching, hey, you know, maybe you should do it. It's kind of a super way to go. And so his super put strategy kind of copies what I was doing about 9 years ago. Would you like to see what that graph looks like?
Sure.
About 9 years ago, I started protecting my stocks with put options and also selling calls. And there's nothing wrong with that except what's wrong with it? What's wrong with it is you can actually set yourself up to lose one of two ways. Now, Mike, if you're right, okay, and your stock closes in this little corridor here, you're going to be doing well, okay? In fact, if your stock closes less than that short call, why then it'll expire worthless and you can do it again and again, okay? And so that's a good thing. But you do have to be really good at picking where the stock is going to land, okay? So have we figured out unlimited upside yet? Does this one have unlimited upside?
Nope. We've got a capped gain.
Okay, good. So let's, you know, good that you get that, good that everybody's got that. All right, we're going to take one more shot at this, okay? Mike, this gentleman had shares of McDonald's, okay, at $22.15 cost basis. Now, at the time, the stock had gone up quite a bit. And the January $50 put options were 87 cents. Now, to finance the purchase of that, we did a bear call spread here with zero risk. The bear call spread generates 242 on the long side and costs 126 on the this is the short side, and costs 126 on the long side. Okay, so this is a bear call spread with a $1.16 credit. Does the $1.16 pay for the insurance policy?
That's right, it does. Our insurance policy was only 87 cents.
Right, and it expires out in January, although these guys expired in June. Okay, so let's take a look at what this graph looks like, Mike. Boom. What does that look a whole lot like?
It looks almost like a long stock position with a little hiccup in the middle, doesn't it?
Yeah, it looks just like a long stock position, except for guess what? There's something missing.
Well, there's no break-even line, is there, Kurt? We never have a risk of losing anything, even if the stock drops down to maybe, let's say, $25, $28 per share.
Yes, so this personal coaching client was able to take stock that he already owned and make it bulletproof and take income and have an unlimited upside. Okay, and once those calls expired in June, Mike, could he do it again? Could he do another bear call spread?
Absolutely.
Yeah, no reason not to. Okay, so we're bulletproof and no cap and no and turbocharged income. This put option locks McDonald's in all the way out to January 2011. Even if there's some kind of black swan event in the market and the market crashes, he's going to have full value. Okay, and that put costs less than the bear call spread generated the first time out. And then, of course, Mike, it's a January put, but it's a June bear call spread, so he can do it again and again. Pretty cool?
Pretty cool.
Pretty cool, and now all the while also collecting dividends, okay? So, Mike, I'm going to turn it over to you next, and just go ahead.
Okay. I'm sorry, Kurt. I was just going to say we have about 5 minutes left, so I wasn't sure what you wanted to do there.
Oh my goodness, my time got away from me. I apologize there, Mike. I thought we actually had more time. I've got to fix this watch. Okay, all right. Let's let me go ahead and send this out. Okay. What two things so far impress you about this presentation? And Mike, I do still think that we can fulfill our promise, and I can make you the organizer. Okay. Can you grab the screen from me?
Yeah, are you sharing the poll? Because I don't see it open.
Oh. Oops. Okay, sorry, gang. It looks like we didn't get any votes in because I prematurely shut it off. Here's the next poll in the sequence there, Mike. Okay, sorry, gang. Sorry about that. I'd like to know what things you'd like to know more about next, and then Mike, if you could share the Power Options tools.
I'm not going to be able to go too in depth with them, unfortunately, but we do have an archived presentation we're going to put up from Tuesday, which goes through that. The main tools, the search tools, and the portfolios for analysis. Unfortunately, today I can't stay longer than probably 5-10 minutes after the 1 o'clock hour here, so we're not going to be able to go too in depth into the tools today.
Okay, all right. We don't have to go super in depth. Can we show the risk graph of a recent client? All we need is XEC with a $20 cost basis and the September $70 puts at $3.
Okay, let me pull that up right now. And you still have your poll open, correct?
Yes, yep, that poll is still running, and I'm going to go ahead and close her up now and share the results. Ladies and gents, sorry about, I got a little wordy today. And sorry about that. I just want to make sure that we explain things real thoroughly, and I didn't give Mike enough time to explain his platform real well. However, it looks like even though we didn't take a real close look at Mike's platform, look, Mike, do you see the results on those polls?
Hold on, sorry. Yes, yes I do.
We've got just the largest amount of folks that want something. They want the Power Options Search and Destroy platform. So we'll have to make sure and give that to you. We're going to give away 2 weeks free of that. No credit card, no obligation. Just try it out, okay? All right, let me go ahead and close that.
Okay, it's my turn now. I just wanted to make sure, and now we should be up and running. There we go.
Groovy.
All right. Okay, so, well, here's the inference curve. I think I got this right. You wanted me to show XEC. Well,
yes.
Before I do that, let me give a brief description, because Bill had some questions coming in. And at the beginning, there were some questions Bill wanted to know about what is the difference between fission and between power options. Well, let's just break that down quickly before we go into this.
Okay.
Kurt's full method is described in the blueprint. Kurt wrote the original blueprint back in 2002. It's been expanded and added to. There's now 10 different income methods. Okay, so the blueprint is Kurt's full description of his radioactive trading methodology. All 10 income methods, what to look for when you're opening stock, for example. The fission subscription on radioactive trading, if you're just following along with the free information or you've recently purchased the blueprint, you can follow over Kurt's shoulder by subscribing to Fish and watch as he makes his trades live in his personal account. It's not really an advisory service, but it's more of an educational process where you can learn more of the income methods in addition to what you've already got in the blueprint, which describes everything, but you can see them being traded in the real markets and Kurt's logic behind why am I doing this adjustment, why am I doing that adjustment. Now, Power Options is a patented suite of search and analysis tools designed for self-directed investors. We support over 23 different option strategies. When we first got together with Kurt about 3 years ago, we enhanced the married put strategy and the portfolio tools to work with Kurt's method in addition to supporting the other different option strategies as well. Now, the tool we're looking at right now is just the custom spread tool. This analyzes a profit and loss chart for us. This has nothing to do with the patented search tools or the portfolio analysis. But what we're viewing here is just a simple setup of buying 100 shares of XCC. It's $20 per share. And later on, I guess as the stock moved up, looking at purchasing the September 70 put for $3. And then we see our profit and loss chart here. Kurt, does that look right to what you wanted?
It sure does, yeah. What we've got there is the familiar hockey stick graph, but with no break-even line, okay? And now what I had hoped to do was to share, this is Tom's stock. I also wanted to share, if we could, Bill's stock, but maybe we'll have to do that next week. And Bill started from scratch, okay? He bought stock and also bought a put at the same time and was able to bulletproof it by repeated use of income method number 4. Now,